Is weekly technical analysis recap. We're going over the TSX, Train to Invest, Focus 5 stocks, gold, oil, silver, and a few corresponding ETFs. It's been a good week in the market. Taking a look at the 3-year weekly chart of the TSX, you can see that for the week we closed higher than we opened, always a good sign, and it shows that buyers were back after the long weekend week before. So it's good to see that we have another up week coming close to the resistance of 12,500. You can see if we break through that, we're definitely going all the way up close back to 13,000. Very, very range bound, especially over the last, I'm going to say, 9 months. You can see 12 up to almost 13. We had 12.8, came back down to 12, especially over the last couple of months, rocketed back up, came back down. So we're very range bound, and it helps us in our analysis. Looking at the MACD and the MACD histogram, there is a red circle because of the histogram being, or the MACD being below the signal line. But as you can see, it's starting to turn up. So that's a good sign, but technically it's still a red circle. Now the histogram bars are definitely shrinking as the MACD converges to the signal line, and that's what we want. We want to see a positive crossover showing that there's a strong buy signal, and if the TSX breaks through this 12.5 mark, it will definitely be a crossover and definitely be a positive signs for the market. On the broader term, the MACD and the MACD histogram are more influential than the momentum indicators, but the RSI and the stochastic are both pointing higher. Good sign. The stochastic is a much steeper slope, showing the stronger momentum, and the RSI is definitely trending higher. Definitely good. Let's take a look at the 6-month daily chart. And as you can see here, we kind of topped out today on the Friday, was the high for the week, and it closed lower on Friday. Now, nothing to worry about, I would say. This is simply taking profits as we've had a huge run-up over the last 5 days. You can see 1, 2, 3, 4, 5 days. We started at 12.2, ended up above 12.4, 200-plus points. Great sign for the market. Now, as you can see, MACD and the histogram both clearly showing positive trends. The divergence on the positive side is growing, which is exactly what we want to see. The histogram bars are growing. The signal line is moving further away from the MACD. Good sign. But that, remember, is showing the past, the lagging indicator. The two leading indicators, the RSI and the stochastic, we do have a negative crossover on the stochastic. Not what we like to see, but I think that's simply due just to the sell-off of a little bit towards today at the end of Friday. The market closed down about 30 points. You can expect investors to maybe sell a little bit more early during the week, next week, before pushing the index higher. RSI, a little flat, nothing to be worried about again. Depending on the news that comes out over the weekend and the economic indicators coming up, we will see the market move higher. Now, something to be aware of is the beginning of earnings season last week, with Alcoa reporting slightly lower than expectations, but that's okay. I would expect this quarter's earnings would be a little better, especially for the energy companies, as we look at the price of oil skyrocketing over almost 20% over the last 6 months. And that's quite a huge, huge jump. We have almost $17.50 increase over the last 6 months. We have the issues in Egypt, as well as the lowering of the price differential between Brent and West Texas Intermediate. So it took a bit of a dive beginning of the week, but then nicely recovered to back above 105. So a good sign for energy companies. Here is a 3-year weekly chart for Enbridge. As you can see, the week definitely, again, closed higher than it opened. Another good sign. We can see that the MACD is starting to turn. So after that horrendous decline over the last couple of weeks, we're seeing a strong increase again. Over the last 3 weeks, we've gone from 42.50 to above 45. So good sign, great appreciation. And the MACD and the histogram are starting to turn higher, boding well for the stock. Looking at the RSI and the stochastic, just like the TSX, very sharply turned higher. Looks good for getting in. So we are close to resistance point. I would say the next one is 47.50. So there's room for you to definitely make 1% in the short run. Looking at the 6-month daily chart, all the indicators are green. We have a great divergence on the positive side, so that's what we want to see. So remember, on the positive, you want divergence. On the negative, you want convergence. RSI heading higher. Stochastic, we have a slight touch, but over the last 5 days, you can see it went from approximately 44.5 to 46. So of course, you'll see a very, very high reading for the stochastic. But again, things are looking quite well. We do have some memories here at 46. As you can tell, a strong resistance point. But again, on Friday, we closed higher than we opened. I would expect a bit of a pullback before Enbridge pulls higher. If we are able to break through the 46, 47 is not a problem, and up again, up towards 48 in the next couple of weeks, maybe beginning of August, is a distinct possibility as long as oil continues to stay high. Looking at IMO, this is 3-year weekly, great signs all the way through. We had a positive crossover a couple weeks ago, and you can see the stock has just benefited greatly. Closing much higher than open, broke through the 42.50 mark and well on its way to 45. Both the RSI and stochastic showing strong signs of momentum, which is very important as we move forward throughout the summer months. Imperial Oil has been readily able to take advantage of the increase in oil. As you can see, 1, 2, 3, 4, 5 days, higher after high after high. Went from 41.50 all the way up to about 43.50, and on Friday you can see closed higher than it opened. Another positive sign. Definitely we're coming up towards resistance here, and it's had a tough time breaking through 44. So it's had a couple of days here, maybe 2 weeks worth of attempts, and just hasn't been able to do it. So I'd warn and be cautious. And do not jump in right away. Wait till it breaks through 44 or comes back down. Looking at the MACD and the MACD histogram, great news here. RSI looking very positive. Stochastic, a bit of a letdown here with the blue circle, but again, that's due to this incredibly steep run it's been since 2 weeks ago. So it started out here at 40, and we're up against almost at 44. So it's definitely a great price appreciation, and this is directly due to the rapid increase in oil. Suncor, 3-year weekly chart, a big bar this week, a lot of movement as we broke through 32.50. Upturn here on the MACD and the MACD histogram. If you look, the bar is definitely wider, showing there is strong signs. RSI and stochastic, both showing good signs of momentum, but again, not as strong compared to IMO because of the Middle East operations that Suncor owns. Here we look, it broke through 33 on Friday, but closed lower as there's definite sell-off for the stock. MACD and the MACD histogram, again, are green, looking good. We do have a rising divergence, but the momentum is showing that investors are leaving the stock as they've tried to breach through 33, but are ultimately coming back down to 32. I'd expect them to potentially sell off down to 31 or come close to 31 before turning up again. If the history is any indicator, if 31 doesn't hold, it's definitely going down to 30 before turning up again. But from a stock that was in the middle of April 28 up to 33 in about 6 weeks, That's a great appreciation. Hopefully you're able to capitalize on that. But momentum is leaving the stock. As you can see, a big drop today from just above 33 to just above 32. Traditionally, 32 has been a solid support for Suncor. Looking at the financials, we can see a little bit of a different picture here on the 3-year weekly chart for Royal Bank. A bit of a smaller bar this week, but again, closed higher than it opened. A really positive sign. Turning MACD and the MACD histogram, looking towards a definite buy signal on the long-term charts. Momentum, definitely showing some positive buying due to the strong week on the TSX. We're still almost at a resistance point at 62.50. Not a ton of room to move, but it looks like it will try and challenge that resistance line. 6-month daily chart, as you can see here, a great run up over the last week or so. MACD and MACD histogram both showing good signs. RSI, the momentum is starting to wane. It's not as steep as incline compared to the energy sector, but it's still rising, which is a good sign. And Stochastic, same thing as well. I gave it a green because it is above the fast is above the slow line. Could technically be a blue as it's starting to peter out. We do notice that Friday closed lower than it opened. Thursday, they're about even, and Wednesday again closed lower than it opened. So Wednesday, Thursday, Friday showing signs of slow momentum as we reached towards the 62 mark. Tried to break through, couldn't do it. Looks like it's going to head down from towards 60 over the next little bit, unless there is some sort of news to change the market's mind. 3-year weekly chart for TD. Again, compared to last week, not that much higher. Closed higher than it opened. Great sign. Looks good, looks good, looks good. There is just a tiny separation between the MACD and the signal line, but it's turning higher, which is what we want. Will it challenge the 86 again? Could come close. Again, over the last 3 years, just above 86, 87 has been its 52-week high. So if it does break through 86, we are going back into ultimate high territory, which could be dangerous, as there will need a strong push by both the economy and Bank of Canada news to push the financials higher. Mortgage issues will probably pull the banks lower as the housing sector in Canada is starting to turn weak. So I would expect that as you look on the daily chart, we're going to come back down from this 85, possibly all the way down to 83 over the incoming weeks, unless, of course, the news tells us otherwise. But just looking on a technical side of things, we tried to break through 85, couldn't quite do it, closed, again, lower than we opened on the Friday. But over the last 6 months, we've seen it try and break through 86, but couldn't quite do it. TD as well as the Royal Bank are quite range-bound, but again, with such a close close to resistance, it's hard to see it breaking through 86. I would personally see it going down over the next week for sure. MACD, you can see the histogram bars are starting to shrink as the MACD and the signal line converge, so it's not what we want on the positive side. RSI showing momentum is leaving the stock, and you can see the stochastic is heading down. We're coming towards an inflection point, and my best guess is that at that inflection point, stochastic is going to go lower instead of turning around and bouncing higher. Taking a look at gold, here is the 6-month chart of gold. So over the last 6 months, gold has fallen by 22.73%, or $377 per ounce. So again, a huge decline over the last 6 months, but we've seen it bottom out at around $1,200 and push close to $1,300. A good sign showing that there has been some gains over the last couple of weeks, but looks like it's kind of petered out here at the 12.8, 12.9 mark. So this is CGL, iShares Gold Bullion Fund. Again, we do see it increase over the last couple of days. Friday, not a lot of movement, closed higher than it opened. Thursday was the best run-up day, but it seems to have made its move and has stopped around the 12.50 mark here. Not a lot of movement. I would expect gold prices to stay fairly flat over the next couple of weeks. But again, just looking on a technical basis, good news, momentum is starting to turn away. And again, good news here, but the momentum is starting to peter. With the resistance line here, if it breaks through, great. We're going back to 12 bucks and potentially even higher. But we do see the gap down here that it has to fill before we can say things are on a roll. HGD, Gold Bull Plus ETF. Again, showing some signs of life over the week as gold prices kind of maintained a higher growth rate, but nothing significant and anything to write home about. RSI and MACD showing that momentum is leaving the ETF, so it could be another buying opportunity at 750 to gain a couple bucks. But again, with the double move here with the Gold Bull Plus, we need to be careful and be aware of when and why it's going to move. So when gold prices are going up, this is great to get into, but as gold prices decline, this will be a loser. HGD did suffer a bit as gold prices rose, but when they stay flat, it's a good price point to get in here at $25 if you expect gold prices to continue to weaken. And I would expect a period of basing now, so this $25 wouldn't be too bad of a place to get in. Looking on the technical side of things, momentum is beginning to turn with the stock. We're coming here with an inflection point, and I would expect the inflection point to be reached and to turn higher. RSI looking good. MACD histogram showing the decline on Thursday, Friday from the Wednesday prices. Not a huge deal, but do notice the gap down as gold prices turn higher. Silver pricing. Silver has actually done worse over the last 6 months. We're looking at almost 35%. We're up at 34.5% compared to 22%. And silver has taken a big beating, and the commodity ETFs have followed. We do have stabilized around $20, but again, looks like it's heading lower if you look on the far right-hand side of the screen. SVR, the iShares Bull Plus ETF, we can see that it is trying to break through 8, can't really do it. Momentum is leaving as prices continue to fall. Sorry, that was HZU. This is HZD. As prices begin to fall, turning higher. So good sign for the Bear Plus ETF. You can see that beginning to turn higher. But again, not a lot of volume as momentum really hasn't swung through. So again, as with all of our commodity ETFs, you need to be careful. It still looks like gold and silver are bearish, so the bear ETFs are going to win out. But as for now, it looks like the commodity sector isn't as strong as we'd hoped, and it might be better to stick with pure equities instead of looking at gold and silver. So that's it for us here at Train to Invest. Check out our website if you have any questions, concerns, you want to chat about something, please email me. I will be glad to talk with you. And check us out at www.traintoinvest.com and see our education services. So that's it for us this week. Have a great rest of the week and happy trading. Bye now.
The organizer has